Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Toby Bordelon and Lou Whiteman giving a 1 to 10 rating to the company named in reference to the black and white patterns of its barcodes. It's Zebra Technologies, ticker symbol ZBRA, or Zebra Technologies, as Peppa Pig would describe it. We'll talk about the strength of Zebra's business, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Lose at a 7. Toby, you're one higher at an 8.
Yeah, Zebra's a lot more than barcodes now. Products and services include barcodes, yeah, of course. Also RFID scanners and printers, machine vision systems, industrial scanners, autonomous mobile robots even, analytics and logistics software, a lot more. Really, really solid suite here. I give them an 8, right? Because in part because they got a dominant market share in the industry. It does mean there's more risk of disruption, I suppose, right, if you're the dominant player. But they're constantly looking to expand through internal innovation, growth, investments in AI and automation. And they should keep expanding their potential market, right, as competitors struggle to catch up to where they are. They got customers in a wide range of industries, retail, both bricks and mortar and e-commerce there, manufacturing, healthcare, transportation, logistics, even law enforcement and emergency response. So they're well positioned, I think, to keep growing even with this dominant market share.
Yeah, Toby said solid. I think that kind of sums it up. Standard for the industry, strong geographic diversification too, a real global business. If there's a knock on it for me, it's just it is sort of a mature business, and the growth reflects it. 4% CAGR or so over the last decade. There's reasonable hope that is going to change, and maybe better days ahead. But yeah, I like what I see. We're increasingly relying on smart warehouses, smart supply chains. Zebra is a big part of that. Could also introduce new competition. I like the business. It's one I have in my own portfolio, but I see enough worries along with that potential that I'm probably maxed out at a 7.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you have 8s this time, Toby.
Yeah, CEO Bill Burns, right? He's been in the top job just over 2 years now, but he's been with the company for a decade. He's led the company to expand into other markets recently beyond their core business. It's helped generate some expectation-beating results in the past couple of quarters here. Employees do seem to like his leadership. Glassdoor rankings are relatively high. Former CEO Anders Gustafsson, I actually had the pleasure of interviewing him right around COVID a few years back there. He's still with the company. He's chair of the board. CFO has been in the role for about 4 years now, has several decades of experience in finance, supply chain management. Management's been very proactive, I think, in diversifying that supply chain. They say 30% of their imports come from China versus 80% a decade ago. So really good work there. And that's fortunate given the whole trade uncertainty we got going on right now. The history of management here really, I think, is a story of consistency and solid execution over time.
Yeah, like Toby said, no complaints. Burns, worth mentioning, he was chief product officer for most of that decade before CEO, so really knows what he's selling. I like that. It's a natural step, I think. Look, this is a team that seems more than capable of taking care of what they can control and managing the business well. This isn't really a innovation or a daydream company. I'm not looking for that here. They are what I think this business needs, so a pretty good grade.
Financials, a 10 is a fortress, a 1 is yikes. Lose at a 7. Toby, you're at an 8.
Right. Revenue growing at a nice pace here, nearly 9% increase year over year last quarter. Net income growing even more, showing some impressive operational improvement there. Debt's, $2 billion, but it's a healthy level. They've got almost $1 billion in cash to balance that out. $1 billion in operating cash flow and $950 million in free cash flow for last fiscal year. I like where they're at. Healthy balance sheet, growing business, plenty of flexibility for another strategic acquisition or two if they get the opportunity. No complaints at all.
Yeah. It does seem like growth maybe stalled last few years, but it is accelerating. I think there are macro trends there that hopefully are helping with that. To add on to what Toby had said about tariffs, forecasting a 19% EBITDA margin for the current quarter, even with 200 basis points worth of tariff impact. Maybe that's not bulletproof, but you'd love to see a company with the wherewithal to kind of power through these situations. If I have a knock, I do think this is a mature tech business. I think it's a good balance sheet, as Toby said. I'd like this to be more of a cash return story on top of whatever growth momentum they're seeing. There's no dividend here, only modest buybacks. Amp that up, maybe I'll go higher than a 7, but still a very solid 7.
Lou, let's talk valuation. How well will Zebra stock do over the next 5 years? How safe is it? 10's a sure thing, 1's a lottery ticket.
So I do think this is a market beater, not a wow market beater, but I'm at 10 to 15% over 5 years because I think its products are in demand. I think, again, they're kind of leaning into some good industry tailwinds. They're as relevant as ever. And I think more and more supply chain efficiency will be a focus through the corporate world. It's controlling what you can. For safety, I said a 7. I don't really see a train wreck up ahead. Your downside is what if it doesn't beat the market, which I think it's kind of just a market performer, which is relatively safe downside in my mind.
Yeah, same for me on both counts here. 10 to 15%, probably not one that's going to grow rapidly, but it should still be a consistent market beater, I think. 7 on safety, too. The stock has actually been volatile in the past, more so than you might think, and I think that's going to continue. But there's little risk of failure here. They're in a solid market position, important to their customers. Global recession, tariffs, trade wars, all that's going to hurt them a bit. They've been able to mitigate a lot of the impacts there so far. They should be able to continue to mostly do that.
Time for everyone's favorite. Top it. Lou, is there a company in Zebra space that you like better?
So I think for this exact set of tools, this is the company to own. Peek behind the curtain, fools, that Toby got his notes in first, and he took the company I was going to take. So I will say not a direct competitor, but I have to give a shout out to GXO. It's a company that is also part of this big trend towards supply chain efficiency. Different sides of the business. GXO uses products from Zebra, but I think these are two good ways to invest in this trend towards kind of digitalizing a non-tech world, which is supply chains.
To be clear, by the way, you guys can pick the same company, and I encourage it because that means it's a really good company for people to look into. So listen, forget what Lou said. Listen to what Toby's going to say here.
Yeah, well, we want to give our viewers a variety of options to consider right here. I am with Lou. I think Zebra is the one I like best in the space if you're looking at exactly what they do. Honeywell is the interesting one for their industrial automation business, I think, but it's more diversified, right? It's a different overall business, but it's still one I think people could look at here. If you want a riskier but maybe higher reward business to look at, Symbotic is doing some interesting work in warehouse automation and sorting. Be cautious there, though. They're still not profitable. They're early stage. There's an accounting issue last year that makes me a little bit hesitant as well to invest until I get more confidence that all is right there for now. But it's an interesting company.
Thank you to both Toby and to Lou. We've given Zebra Technologies an overall score of 7.5 out of 10. That's strong. It's a little short of the 8.0 that would force me to own shares, but very impressive. And higher than the 6.7 that Emily Flippen and Andy Cross gave Zebra about a year ago. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Rollins, the company, not Henry. Till then, Fool on.
We could do Henry Rollins.
I'd be scared to underrate him.